Credit Bank, we very much focused on trade finance. In fact, it's a premier kind of product, is what we are so much focusing. And we have seen the fruits because we have make it a strategic point to really help our clients in accessing trade finance. So as a bank, we have made a deliberate decision, a deliberate strategy to focus on trade finance. And this started way before even the capping of interest came into place. And that's how we have been able to project a very good growth for the last 2 or 3 years that it has been, we've been focusing on the same. So for us, I would say it's our bread and butter for now. Yeah, it was a very humbling moment, and we thank God for that. And basically, it just shows how we so much geared in terms of doing the trade finance. We did a lot of volumes, we supported a lot of clients, and because of that deliberate decision to be able to focus on it, at least it bore fruits, and we were able to, the world or people outside, they were able to recognize that there's something indeed that has happened here that has made a very big impact. So that's why it came to being awarded under special recognition on trade finance. The reason why it was special is because we demonstrated a lot of growth, a lot of trajectory or acceptance to offer trade finance. And we were able to beat other competitors on that, whatever. And I mean, basically it was just a recognition that we have specialized on trade finance. So, and we were happy about it. UDS trade finance, it's, you can innovate around it, I would say, I'll be honest with you. And when I'm saying innovation, it means you can structure each transaction differently. So you're able to offer a specific solution to a specific need and to a specific transaction without so much being concerned on the conventional banking. The other conventional banking is, the first question is always what security or what collateral it's all about. Here so much we are worried of what is the underlying transaction, what are you doing, what are the risks that could be involved, how can we be able to mitigate those or reduce or minimize those risks. So when we are doing risk analysis, then we're able to identify, because you can easily put a dynamic from where the transaction will start to where it will end. Then what we just need to assess. And for us, it's also a cost effective also to the client. You look at it because we earn commission from the solutions that we give. Therefore, even from a customer perspective, it's a cost effective to it. Instead of paying 13.5% per annum of interest rate, then you only pay commission on average maybe 2% per annum on most of the instruments. So you're able to whatever. Then it also becomes very easy because it's straightforward. It is addressing a certain need that the client have. The normal convention, you can't innovate, you can't structure around it. If it's a loan, it's a loan. But this one gives you way live in terms of being able to handle the client from a different perspective. At the end of the day, we look at the customer. This customer needs to grow. Him is in this business of either construction or supplies or anything. What you're telling him is he needs to concentrate on that business because that is his core business. The finance matter, he leaves it to us. And the finance matters, then you come with a myriad of solutions that are fitting in with his business. So you're looking at growth two ways. The bank will earn revenue from it. The customer will also be able to expand or grow from it. So it's a win-win situation. It's a partnership kind of thing where the two parties, one is earning some revenue, fine, he's able to offer a solution. The client is also able to increase his business and focus and concentrate on what he knows best. So it brings that aspect of more of a partnership on every other transaction and with your client, because it is tailor-made to the specific solution or to the specific need that he requires at that particular moment. So because of the tailor-making bit is what is making us now even look at it more attractive, and the client also looks at us more attractive. What I've given to one client, even if they're in the same industry, dealing with the same counterparty, may be different to a similar client in the same sector, also dealing with the same whatever. Because remember, their model is also slightly different. Each business has its own model. So we are trying to look at coming in within that model and structuring or tailor-making some solution on that basis. So basically, that's why it will be very, very important to us. And number two, as a bank, when you do the normal conventional loans, you have to deal with the issues of non-performing loans and all that. But when you restrict transaction to a specific transaction, dealing from A to Z, it's clear how the transaction will be extinguished, it's self-liquidating and all that, then it becomes more even attractive to both parties. For any SME, they can approach the bank from any branch. Every other branch, we are synchronized, we are the same. So one needs just to approach any branch. He'll be guided, he'll be given a relationship manager or a relationship person to be able to manage, who will pick up all his requirements, his needs. He will also be given what requirements or what documentation will be required. Okay, they'll discuss on the possibility of the transaction or possibility of the solution depending on the client's needs. Then, of course, now from there it will be processed, and there will be, if the transaction is successful, of course, it will lead now to more partnership, letters of offer, and all that. What I know, one of the things that we do well is on TAT and SLA. We're able to make a very quick decision in terms of knowing whether we are agreeable to the transaction or not, or if we are not, then this is what we are proposing in terms of how best other way we can do it, other than what maybe the client was looking at. You'll be surprised that some of the clients have walked to the bank, and when they have explained their scenario, you realize they even don't require a loan or a bank facility. You're able to give that advisory to the client, and he's able to benefit. He's also able to structure or even have more negotiation in terms of when he's negotiating some of the contracts with his counterparties. So he's able to know, I need to look at 1, 2, 3 things before I decide this is how I want to model my business. For us, I would be honest, it's about tailor making. We treat each and every transaction separately and in its own unique way. So we tailor make a solution specific to that particular need. Then that is one of the cutting edge for us. Then we have also a very quick turnaround in terms of decision making, especially even at credit level. So we're able to make very quick decisions, because some of these transactions, remember, by the time the customer is also coming, there is a time effect to it. You delay by 1 day, somebody has to meet some contractual obligations. I give an example. If somebody won a contract, he's given maybe 21 days to submit a performance bond, meaning by the time he's also coming to the bank and that process is being done, he has to meet the 21 days, otherwise he loses the contract. So we are mindful, or we are aware of such scenarios, and therefore that's why we go ahead and try to make a very quick decision to meet, so that also the customer is able to meet. Then the other bit is we look at every transaction from a relationship point of view and from a partnership point of view. We're able to sit with that client. As much as he has one transaction, we offer a global kind of solution to the entire business model. Fine, he'll have approached the bank with one transaction, but again we go further and address his other scenarios, such that that customer at the end of the day, he feels more, or he gets more value. So he gets more even advisory. So the customer feels, I'm where I needed to be, I'm where I belong, because he knows even tomorrow if he gets such a scenario or a transaction, then he knows he can walk in and he get a solution out of it. So those are, I would say, is our cutting edge on those scenarios. There are very many products that we offer in trade finance. I would say the guarantees, and the guarantees, there are various types of guarantees. We have the bid bonds, that is the easiest for everyone who is doing the tendering business or is looking for business. So that's the beginning point, the tendering. Then we have the performance bonds. Those people who have won contracts and now they're required to perform. We have advance payment guarantees for those big contracts that somebody is required to mobilize and requires some mobilization, then we're able also to come in. We have the normal payment guarantees for people who operate under open account basis. We have also import letters of credit for people who are importing to sell or to stock or to supply to other places. We have invoice discounting, we have supplier financing, we have distributor financing, we have structured commodity financing, which is now where basically that is even more structured to the extent of buying commodities in bulk, or people who trade in bulk, commodities in bulk. So we have a myriad of many solutions that would fit in with any business or any scenario that anyone is in. There are those popular ones like the bid bonds. Those are very popular, and for me is a basic point. That's the beginning point of every other transaction or any other instrument you want to do or any other solution you want to do. Because for me to get that contract, I needed to tender. So I will start at the bid bond level. Before now, the performance board comes and LCs even comes and post-import loans. So the bid bonds, I would say, are very popular. The performance boards, again, are also very popular. Yeah. Import LCs are also very popular for people who import a lot. As a country, we are net importers, so there's a lot of importation that happens around. There's also the post-import loans, which are tied to the importation again. So there's those, I would say, those four. Then there's the more contract financing. And for us, we do contract financing differently. We do it for the normal service providers and for the normal suppliers. So the contract financing will have the component of either certificate discounting or invoice discounting or even LPO financing. So we can do pre-contract or post-contract financing. So all that, I would say those 5 or 6 products are most popular. There is no specific target because remember, as I mentioned earlier, this trade business is available for everyone in every sector. Be it a trader, be it a wholesaler, be it a supplier, contractor, even in real estate, even in transport. So, and the more you have, the more sectors, the better, because also your risk is also diversified from a bank perspective. So we target each and every sector because each and every sector has a need for a trade solution. So we are not limited by any sector. Even in terms of lower limit, there is not so much limitation because some of these trade solutions or some of these trade transactions are dictated from a contractual point of view. You find a customer even who is doing $50 million or 50 million Kenya shillings. He wants to tender for a bid bond in a certain public entity. And that public entity, they want a bid bond of only 10,000. This is a big client, yes, to some extent, but he's also bidding for a job of 10,000. Remember also this 10,000 is a percentage of the contract value. So this contract could be on average another 100,000. Remember, for him to make the turnover to 50 or to 500 or to 1 billion, he has to do many transactions, not necessarily one transaction. So for us, we cannot really dictate on to what level somebody should be able to come, or we can't really limit somebody to the extent that his transaction is small. It is more because also the counterparty is dealing with, that's the nature of that transaction. But this person can be able to do volumes and also improve his turnover and also improve what is required. So the transaction amount for us is not an issue. We don't limit it on that basis. I think for me, there's every reason to come to Credit Bank. Number one, we are agile. We are very upcoming and transformative bank. We are agile in terms of we are flexible. We work with you through the journey of your transaction. As I mentioned earlier, when a customer comes, we look at that particular transaction that has made him to come through, but we go further step and look at holistically, and we are able to give him a variety of solutions that will fit in within his business model. We tailor-make the solutions. We have a quick turnaround of decision making, at the yes or a no, but at the right time. And then we're able to give advice or advisory services to also our client, so they become more better and they're able to improve on their business model as they go along. What I can tell people is they should look at it. We have financed so many transactions in this country, and that's for us to even be recognized for trade finances because there's something happening. And what I would tell our clients is, and potential clients is, try us, and you see there is a big difference from what you already have. You are likely to get more value than already you have.